Welcome back. I'm Brandon, the HBAR Bull. So last week we heard from Mance Harmon and Lehman Baird, and this week we're going to get a different Hedera perspective from some special guests. We have Shayne Higdon, the CEO of the HBAR Foundation, and we have Elaine Song, the Chief Strategy Officer of the HBAR Foundation. Elaine, Shayne, welcome.
Thanks a lot, Brandon. Great to be here.
Likewise, looking forward to it.
I am too. So, Shayne, we'll kick this off with you. As we approach the 2 year anniversary of the HBAR Foundation's establishment, in your opinion, what is the state of the Hedera ecosystem?
Well, first of all, we have an ecosystem. When we started this journey a couple of years ago, we really didn't have an ecosystem. We had a network that was performant, that was, cost effective. But, now you can, go between different use cases. There are real use cases on the network that are executing each and every day. There's connectivity amongst the use cases. We saw one, just mentioned last week with Shinhan Bank and their stablecoin. We have infrastructure. So, we've got more wallets to choose from, custodians, fiat on and off ramps, and an ability to use HBAR and other HTS tokens. And more importantly, the ability to build upon the network features. So, we're really excited that we've gotten this far, got a Coinbase listing on other exchanges. So there are a lot of options for, both retail and developers building on the network.
The big thing that I've noticed over the past 2 years is 2 years ago, there wasn't a lot for retail participants to really do on the Hedera network. There were some basic things, but the difference between then and now has been really impressive. So, just really impressive across the board. So, Elaine, I'm going to go to you next. Can you just give us a recap on the strategy of the HBAR Foundation over the past couple years?
Absolutely. So if we think back to, I guess, mid to late 2021, when the foundation was first started, it really was about how we could create more activity on the network, right? So we had this vision that there were going to be groups of individuals and institutions forming these communities, and that HBAR was going to be the asset and the gas that really powered all of that activity. And the way we felt that was going to be best to achieve that was to focus on four key areas, right? So the crypto economy, basically all economic behavior done on the Hedera network, fintech and payments, so focusing on a very specific but very envelope pushing use case within the financial sector, the metaverse for consumer engagement. So how are we engaging with, basically customers and consumers, especially as it relates to brands, and then sustainable impact, right? So knowing that the Hedera network is so performant, but also so green, how do we really build the appropriate infrastructure to allow the world to meet its ESG goals all on the Hedera network? What we have found was that over the past 1.5, 2 years, the direction that we set out towards absolutely was the right one, right? So in fact, in some cases, our original idea was actually the truest. I think some people know this, not everyone, but the Metaverse Fund was originally named the Consumer Engagement Fund because it really was about engaging these brands to create these Web3 experiences on the network. We changed the name of the fund to be the Metaverse just because at the time the Metaverse was the easiest kind of thing to understand. But in reality, it really is about how you use things like the Metaverse, NFTs, gaming, VR, all of these kind of ecosystem enabling technologies and features to allow for consumers to engage with their brands differently and vice versa. And so we've actually kind of gone back to the original naming of that fund. Internally, we call it this Consumer Engagement Fund. You'll hear members of the foundation talk about that fund in that way now, because we really do think the original idea was the same. The same goes for the other funds, right? We have seen that the original core idea, the direction that we were pointed in, is absolutely the right one. Now, of course, the strategy has changed and gotten a little bit better in the last couple of years. And we've refined it in a couple of ways. So the first is that the foundation has always been a kind of grant giving, business development, growth organization, right? We very naturally need product and tech partners. So we have been partnering with our friends over at Swirls Labs who are helping us really execute a bit more efficiently and effectively on these strategies. And the way that we've been collaborating is what we call these playbooks, right? So we've identified these three areas: on-chain finance, ecosystem as a service, and sustainable impact as key areas where the foundation and Swirls can partner together to create really meaningful impact. So, the names are, pretty illuminating, but on-chain finance really is this intersection between the crypto economy and fintechs, really basically how we bring finance and financial applications onto the Hedera network, leveraging the evolution of DeFi, but also the fact that institutions are now expressing a lot more interest in getting involved, especially on our network. Ecosystem as a service, how do we allow for brands and consumers to engage together within an ecosystem that's both physical and digital? And then, of course, sustainable impact, which really is about bringing the balance sheet of the world onto Hedera, right? How do we actually help people and help organizations meet their ESG goals and ultimately make the world a better place in a more effective and scalable way?
Now, the strategy that we've had has certainly gotten plenty of adoption, but it's good to hear that you're staying nimble and adjusting that depending on market conditions. All right, so Shayne, I want to go to you next. You've been with the HBAR Foundation, obviously, from the very beginning. What have been some of the biggest challenges for the HBAR Foundation? And these could be both ones that you knew were coming when you signed on and others that might have taken you by surprise.
So one of the biggest challenges I think we had was coming out of the gate where, we announced that the foundation existed, and specifically it was on open access from Hedera, where they announced that they were creating a foundation, and that I was going to be running it. And, we had only just created the foundation officially. And when I say officially, all of the legal documents, the August, a month prior. So we were in no position to actually operate. Though, Hedera, in the interest of transparency, wanted everyone to understand why they would be transferring HBAR to some new accounts. That became really difficult. Why? Because I think there was a lot of pent-up demand for both developers, but also for, retail and the community at large, given the level of demand. And so we were just flooded with grant requests out of the gate, and we didn't have a grant process at the time. We didn't have any BD, business development folks to work on those grants. And so that was the biggest challenge. We got over that hurdle, but we still, as a result of that, were quite slow. And so that was one of the biggest challenges. How do we establish proper rigor, proper processes, in the regulatory environment that we were in to make sure that we were doing things in the best, most efficient way possible? And we've known for quite a while that our grantee experience has not been where we wanted it to be. So beginning in March of this year, we implemented the first stages of our automation and process improvement for the grant process, while still having the level of diligence and rigor that we wanted to make sure that we're putting good money in the right places. And so since then, we've gotten 2 times faster on a couple of key areas. One is scoping a grant. These are the conversations that many grantees would have with our business development team, where we do a tech review, a technology review, where we then review the grant, the terms of the grant, the milestones of the grant. We've gotten that used to take from beginning to end roughly 168 days, which is quite long. We've gotten that down now to 80 days, which is roughly a little over 2 times faster. And then the approval. So there's a couple of levels of approval that we have to go through. We have a grant committee. That grant committee has to go through and officially approve. So the business development resources and team have to go through and write up the grant application, and then they have to present it to the grant committee to make sure that there's questions that can be asked and making sure that we're not missing something. That approval process used to take 105 days and is down to 51 days, which is also 2 times faster. This is not the end result. We expect to continue to get more and more efficient, but this is just since March. And so we feel this is showing a lot of promise for us. That said, we've also, you guys have heard me say many times, 94% of our grants that we give are milestone and performance based, and it takes some time to put those proper milestones in place that align incentives. And we've gotten just much better at it.
One thing, Shayne, that was, illuminating for me was we actually had to build and put in systems that didn't exist to actually be able to come to these numbers, right? Like,
Yes.
we use
Yeah.
CRM systems. We've built in workflows within the CRM system to ensure that, the right people are looking at and opining and providing feedback on the grants at the right time, understanding that there is a lot of cross-stakeholder engagement with one grant, right? It's the BD team, then it's the leadership team, and then it's finance and legal and compliance and like all of these different kind of components that go into a grant. It really is, quite a lot. And we've actually had to invest quite a lot of time in building up even the sheer infrastructure to even track our progress here. So it's
I
very
think
much
that's a
been like
good
a
point. Yeah, Elaine makes
yeah.
a good point. We have something that we call the grant management system. And so, Salesforce is, like a lot of companies, the CRM that we've been using, and we needed to create a schema that allowed us for every grantee and specifically for every wallet address, who owns it, so that we can then track not just the grant, but on-chain activity associated to that grant. Because what we then built is, let's say it's a $200,000 grant and we give $20,000 up front. The rest are milestone based as an example. And then we need to be able to track, how many accounts they've created or, how many HTS tokens have traded or, name the specific milestone that would then unlock additional HBAR to pay for, network activity as a result. How do we track that specifically? Well, we had to build that system where for every wallet address that is on the network that we have funded, we're able to then track that. We then built a system that says from 0 to 100%, where are they in the achievement of the milestone, red, yellow, green. For those that might be yellow or red, we then work with the grantees to understand why is their application delayed, what can we do to potentially assist. And so it takes a lot of not just data analytics, but also engagement by our team post grant to make sure that many of these applications that are rolling out on the network are successful.
Yeah, makes perfect sense, and you made some really good points. So you were flooded in the beginning, but a big part of our job at the HBAR Foundation is to continue to attract builders and developers into the space. Elaine, can you just tell us about how that's been done to this point? Continuing to keep that flow of developers and builders coming in, and the plans going forward to keep our developer activity on this pretty impressive uptrend that we've seen to this point.
Yeah, I think was it last week or the week before? Asari published kind of their analysis of other layer ones, and a key point that we found as kind of a really good data point on our scorecard was that Hedera had the largest quarter-over-quarter increase in developers. I think it was something like 30%, perhaps. All of what Shayne and I have talked about in terms of the grants that we've given and the strategies that we've employed have been somewhat successful in that, right? I think if you look at it from an individual grant, there's a very direct connection between a grant and a developer, right? Because we very much are funding developers to build on the network. Like Shayne mentioned, all of our, or 94% of our, funding is milestone driven. So it really is about how do we actually get people to build on the network. So that grant strategy, I think, has a very kind of direct correlation to that. The second thing is the strategy that the funds utilize. So all four of the funds and the three playbooks have a very kind of shared approach when it comes to execution, which really is about creating this flywheel of usability, right? In terms of, do we have the infrastructure that we need? Do we have the applications, whether it's markets or applications that the end user or the HBAR holder can utilize? Have we made that easy, right? One thing that Shayne talks a lot about internally is kind of the 3 steps to nirvana, right? So how easy is it? How quick is it for someone to go from kind of their starting point to the end goal, right? If my desire is to swap HBAR for another HTS token, then how easy is it for me? How many hoops do I have to jump through to get from purchasing the HBAR or getting the HBAR to actually completing that action? So it really is about creating this very user-friendly flywheel within each of the funds. And then the more important part is that each of these flywheels connect, right? So it's not like you have one fund that's siloed. You're able to move across the different verticals, hopefully very seamlessly. Of course, we have things like the accelerators that help us really accelerate kind of the startup developers who are really kind of getting their feet wet in Hedera. We've made a couple of easy, no-code, low-code investments to make it easier for developers. We've done things like partner with Open Zeppelin and Third Web to make it, again, easy to develop and kind of have the experience of developing on Hedera as close to other kind of environments that you might be familiar with. And then, of course, we started really supporting and working with the Swirls team on EVM compatibility and equivalence, right? I think Solidity as a language, Ethereum as a developer community really is an important part within our ecosystem. So how do we make sure that Hedera not only gets closer to that, but can bring the benefits of Hedera that are unique to Hedera, that are special to Hedera into the EVM world, right? There are, key aspects of how our services are architected that while it won't be a one-to-one with Ethereum, that's actually a good thing, right? Because it's an improvement upon what exists. And I think ultimately that investment in developers has panned out. I think something like over 900,000 accounts have been created this quarter, so in the last 3 months, which is insane. And 77% of those are attributed to foundation grantees. So we're actually seeing the investment that we've put in developers translate into on-chain activity and metrics, which is exciting.
Well, I have seen a difference over the past couple of years. A few years ago, I heard a lot about the challenges from developers. Now I'm starting to hear developers say how easy it is to build on Hedera. So that's a shift that I've seen. It's been slow, but now that we're getting to the point where we have more of those tools, it is getting a lot easier.
Glad to hear that.
All right, Shayne, I'll go to you on this next one. So, what has the HBAR Foundation done that you're most proud of?
We've done a lot, and we've done a lot with a small but mighty team. And I want to run through some of the numbers, some of the KPIs that we've used to measure success over the course of the last, couple of years that we've been doing this. We, unlike a lot of other foundations, we didn't go out and hire, 200 people or 100 plus people. We've done all that I'll discuss with 17 full-time employees and 12 contractors. And I'm really proud of that. And so let me give you some of the numbers. So in May of 2021, our coin market cap ranking was 60. Our average daily transactions per second was single digits. It was 7. Our total transactions on the network since mainnet went live was less than 1.5 billion transactions. Total accounts at the time, lifetime to date, was 250,483 transactions. Because we had no DeFi, we had no TVL. Keep in mind, it wasn't until February of 2022 that we had EVM compatibility. We had some smart contract capabilities, but it wasn't significant. Our total cumulative network revenue up to May of 2021 was 202,927. The number of HTS tokens on the network were 585, and the number of smart contracts on the network was 332. So we had a long way to go. And when I reflect on your first question where I said building, what are you most proud of? We built the ecosystem. And so now let me give you some numbers as of June of 2023. Our network ranking, on average fluctuates between 31 and 33. That's an improvement of roughly 27 places. Our average daily transactions per second, again, this is at the end of June of 2023, is 965. That's 137x increase in performance. And right now, on average, we're doing well over 1,000. We've hit over 12 billion transactions on the network at the end of June. Our total accounts, I know they're sitting at over 3 million, but at the end of June, we're 2,867,437. This 11.4x increase. Our TVL is 281 million versus 0 when we started. We have multiple DeFi applications, more that are going to be coming online. Our total cumulative network revenue through June of 2023 is from May of 2021 until June of 23 is 1,755,944. And we think that we'll end the year at roughly $4 million in network revenue. So imagine going up from a couple of 100,000 to almost $4 million in a couple of years. That is, it's incredible. And if you see that growth in like a normal, software company, you look at that and know that you're onto something big. The number of HTS tokens went from 585 in May of 2021 to over 32,000 HTS tokens on the network. That's a 55x increase from May of 2021. And then finally, our smart contracts. We've got almost 5,000 smart contracts on the network, 4,841. That's a 14.5x increase. But you say these are great numbers. Yes, we have more to do, and we are hard at work doing that. And you're going to continue to see things coming out of the foundation. But one thing that I had said multiple times, on social media is that I would share something that we haven't shared before. So how many HBAR has it taken to get the things that you've just gone through, the success and the performance? We have spent 1.957 billion HBAR. So that's 37% of our total grant of 5.35 billion HBAR is all we've spent to get the performance on the network to date. And that's impressive. Now, also keep in mind that includes 250 million HBAR that we put into account 800 for staking rewards. So this is impressive in so many respects. And again, let me remind you, 94% of the grants we've given are milestone or performance based, which means that many of these tokens remain locked until and unless a grantee achieves their milestone. Let me give you some other things. So, there's been some numbers floating around about, various grants that we've made, et cetera. And while the terms of each grant can be different, let me tell you kind of some of our guiding principles. One guiding principle is that we typically try to not pay more than 10% of the total grant upfront in USD. And there's many reasons. Many grantees have come to us and asked for us to defray development costs. And we've done that. But some of those development costs don't necessarily make their way back in terms of network fees. And so we try to limit the amount of upfront grant, in USD or in HBAR that we give to 10% so that we can put the remainder of the grant in milestones to be achieved, where if a grantee achieves it, we're happy to pay it because they're now making the network more valuable, and it's what we want. And so I think that this team, as I go back to, has done incredible work despite all of the back office things that many of the community and others don't necessarily see. We've had to create this to scale what we're doing, to scale the foundation, and I'm incredibly proud of the work that this team have done.
Well, there's some impressive metrics and there's a lot to be proud of. But I do want to touch on one other thing. Is there anything from your tenure so far at the HBAR Foundation that you would have done differently?
I would have waited a little bit longer to announce that the foundation existed. I think there was some undue pressure put on us in the early days that made us do some things that, we didn't necessarily need to do. I don't think we needed to make the grants as early as we needed to. I think we could have put some operational things in place that allowed us to perform better and allowed us, and what I mean by that, it would have allowed us to have a better grantee experience. We would have been able to get some of these back office systems and processes in place so that when we can say, hey, we're open for business, there's an incredibly smooth process that's transparent and everyone understands it from the beginning. We didn't have that luxury. And so I would certainly, if I was given the choice, would do that over again.
Yeah, that's understandable. So, Elaine, that was looking back, but I want to get your perspective on where we sit now. What are some areas of improvement for the Hedera ecosystem and the HBAR economy?
I think we have done a lot of really good work in establishing a strong baseline. I think when you think about it, kind of either whether you think about it as a funnel or a flywheel, kind of there is a somewhat sequential process in terms of building an ecosystem, right? So one thing that we've done really well, actually, this quarter specifically, has been to level up the baseline of users or adopters or kind of HBAR holders within our ecosystem, right? So we've made kind of quarter over quarter kind of exponential growth in how many new users we've been able to onboard, right? That's great. That's a prerequisite to having a growing and thriving ecosystem. The next step from that is actually to continue to engage these users, right? So I think from a metric perspective, that is one thing that really is top of mind for me, which is on average, I would say that only about 8% of our accounts we would consider active, right? That's kind of a low number. And so what that means to me is that we really need to double down and continue to focus on investing in an ecosystem flywheel and then the usability of our ecosystem, right? And so I think when it comes to increasing that number, it really is about putting ourselves in the shoes of the community, of the holder, of the retail investor to say, okay, if I have HBAR, what do I want to do with that, right? And it really is about focusing on, key applications that are solving existing challenges, and then having that be connected to, let's say, kind of an orthogonal use case, right? So that really is for me kind of the key area for improvement, which is we've laid a lot of good groundwork. We're starting to build the house. How do we now actually make the house like stronger, bigger, prettier, what have you? In terms of where I think we can continue to do well, we've done, a lot of really, what I would say unique and meaningful use cases. The Shinhan stablecoin pilot being one of them, but we have a lot more of those kind of coming down the pipeline. And I think, I'm definitely biased, but I think our BD team is very unique in that regard, right? They're constantly going after where they see kind of opportunities that will move the needle. And then they really sit with these teams to like make sure that the strategy is sound and the execution plan is strong. So really kind of continuing that kind of hand-in-hand collaboration that we have with all the grantees who are doing such amazing work.
Yeah, makes perfect sense to me. So last week when I talked to Lehman, he did field one of the community questions, and I wanted to try to do the same thing with you guys since I have you. So the first one I'm going to direct towards Shayne, and it comes from Mel. He asked, is it possible that startups just take the money from a grant, they build something, but they're never really going to use it, and then they leave with the rest of the money? Now, he gave a specific example of an application that hasn't gotten a lot of traction as of yet, but I thought it was a good opportunity to discuss the general controls and strategy around grant giving at the foundation. Shayne, do you have any insights you could pass on to Mel?
It's a great question. First, we try to prevent that. So part of our upfront diligence is truly to try to understand from the grantee or the potential project or potential grantee or project, what is their business model? How do they plan to make money in perpetuity as opposed to just creating something and then, they, run away? But that's only one part of it. The other part of it is, as I said in my previous answer, we try to limit the amount of funds, both in USD and in HBAR, that we give up front to no more than 10%. So if a project does build something and they decide to rug pull or something doesn't happen, they decide to run away, they've gone with say 10%. So in a $200,000 grant, they've run away with $20,000. Not an insignificant amount, but it's not something that, is going to necessarily break the bank. So for us, we try to put those things in place. And then, as I said, the remainder of that grant, as an example, would be put in milestones. So only if they achieve those milestones do, we actually have to pay that out. And so we've tried to put the necessary rigor and barriers in place to prevent that, both in terms of our upfront diligence, our upfront tech review, how real is the technology, all the way to, when we actually give them a grant, making sure that we are collaring that grant as best we can.
Yeah, no, that makes perfect sense. So the next one I'm going to hand over to Elaine, and it comes from Coinman, the original HBARbarian. He said, this is a question for someone at the HBAR Foundation. Why are there no centralized exchanges adopting HUSDC after so many months? And for those that don't know, HUSDC is the Hedera version of the USDC stablecoin. He goes on, surely having decent liquidity and availability of the second largest stablecoin as an HTS token would be good for the ecosystem and encourage folks from other communities to explore Hedera. If there's a reason this objective hasn't been pursued or it's been delayed, I'd like to know the reasoning as for why. Elaine, I think it would be good to respond on USDC specifically, but also on the broader HTS token adoption front.
Yeah, happy to. USDC has always been top of mind since we launched it, or since it was launched, I want to say late 2021. So it's been a while since the asset has been out there. So a couple things about liquidity or asset specific liquidity. Absolutely agree. Having a centralized exchange to support USDC on Hedera would be phenomenal, right? It would be a really easy way to get into the asset from fiat. Obviously, it being USDC, and given that the majority of on-ramping happens, at least in our ecosystem, through USD, it would be a very kind of easy and simple swap. The challenge, and I'll just be completely frank and open with this, is the challenge is that USDC on Hedera, our liquidity is weak and the market cap is low. Now, that's not for lack of trying, right? I think most of our grantees, especially our DEXs, when we have conversations with them, if they ask you what the foundation's number one priority is, it would be USDC, right? We're always asking about the USDC liquidity. We're always kind of looking at prioritizing how we can strengthen the USDC asset and kind of its role within our ecosystem. It's a challenge though, right? Because it is a little bit of a chicken and egg, right? So, and this is where I'll tap into my previous role listing tokens on exchanges. But when an exchange looks to list an asset, it really is about the demand and the usability of this asset, right? And so if I am looking at USDC on Hedera, I'm looking at the USDC on Hedera market cap. I'm looking at the volumes of the DEXs and kind of the volume within those pools. I'm looking at which applications are using USDC on Hedera. I'm looking at which wallets are supporting it. I'm looking at the entire kind of on-ramping and off-ramping and then usability or utility ecosystem around that particular asset. Now, I'll be the first to say that ecosystem on Hedera right now is still weak, right? It still is a top priority for us. The problem, though, is one of the key things to increase the strength of a USDC ecosystem is for it to have a centralized exchange listing, right? Because that way you can inject more money into that ecosystem easily. So it is this chicken and egg situation. It is one that we have not deprioritized it. We just have not been as effective in our strategy as we've wanted to, right? It just is a lot harder. I will also say USDC specifically as an asset is managed a little bit differently within exchanges, right? When you have other exchanges or when you have other assets being listed, you can just kind of pull liquidity from a different open market or market makers or whatever. You can do that with USDC too, but you also need to manage the inventory within the asset, right? So if I am pulling or if I'm bringing in USDC ERC20 and I want to pull out USDC like Omni or Tron or I think those are generally the chains that USD multi-chain USDC is supported on, then the exchange actually has to manage the inventory on the back end, right? So they have to have enough USDC in ERC20, and they have to have enough USDC on Tron or whatever, right? So the ability to manage that inventory is also quite challenging for exchanges. So I would consider multi-chain USDC being listed on exchanges as more of a exception, where there has been work done on the exchange's backend to support that inventory. I think generally it is more challenging for exchanges to list USDC multi-chain just because that inventory aspect is an additional operational risk, right? Because you can very easily have like a bank run on one USDC and living on one chain. So it is more challenging. More broadly on HTS tokens, it really comes down to a token by token assessment, right? Exchanges care about volume, they care about users. So when they look at an asset, they want to see the ecosystem around that asset, right? And I would say within our ecosystem, we do have really flourishing ecosystems around particular assets, but they're still young. And they're not necessarily at the point where a centralized exchange is going to be like, okay, I'm going to go list this, because there are liquidity and there are kind of inventory risks that exchanges do need to kind of take into consideration. So for me, the best way to get to that end goal of having more Hedera tokens listed on exchanges is to continue to do what we're doing right now, which is to look internally and to grow the existing Hedera ecosystem, right? The more vibrant, the more robust, the more liquid, the more users that we have, the easier it will be for exchanges to list this particular token. It has very little to do with the fact that it's an HTS token and more to do just with the fact that some of our tokens are still early. Very cool and growing, but still early.
Well covered, Elaine. Now, we're going to get our crystal balls out here in a second, but Shayne, I wanted to go to you real quick. In the short to medium term, where do you see the biggest opportunities for Hedera?
I see the biggest opportunities for Hedera in promoting us in the consumer space and in the institutional investor space. Those are two areas where I think we have a huge opportunity. As institutional investors, everyone's been tracking all the BlackRock and Vanguard and spot Bitcoin ETFs, et cetera. But we've got some real financial use cases that have been built on Hedera. And so we have efforts internally to expand our reach into institutional investment to make sure that these folks are aware of Hedera as a performant, cost-efficient network, but also some of the use cases that are building on the network and ways that we might be able to partner with them to do the same. We're at a place now in our maturity where we can have those types of conversations and make them really productive. So that I think is a short to medium term area. The second area in the consumer space, I think there's an opportunity for us to raise the awareness of the Hedera brand. A lot of people call it retail, but I'm going beyond just the retail investor to just a normal person that, understands, at some level what Hedera is able to deliver to them. I've long said, certainly internally, and I'll say it here, the moment that a consumer engages with an application but has no idea that Hedera is on the back end is the moment that you're going to see a significant amount of growth on the network. Because we've made at that point, i.e. the grantee, the partner, has made the use of Hedera completely invisible from a user experience perspective. They've made that, as Elaine said, the 3 clicks of epiphany. They've made the adoption of Hedera completely transparent to the user in a way that their normal behavior on their phone, on the application, is just going about their day, engaging with their favorite sports team, engaging with, buying a ticket online, engaging with, name your use case. Those are 2 short to medium term opportunities that I think we have, and we're certainly exploring them in earnest.
Good answer. Now, to wrap this thing up, I asked this same question to Manson Lehman for last week's interview, but I want to get your opinions as well, and we're going to get those crystal balls out. So, Elaine, we'll start with you. Where do you see the Hedera ecosystem in 5 years?
Yeah, I feel like these future looking questions are always so hard. And I think generally I try and answer it like, oh, most, most adopted, like bridge to Web3, like all those things. And it's true. All of that is true. But what I have found perhaps to be helpful to kind of draw that picture is to just talk about certain characteristics, I think, of the ecosystem that I'd like to see and that we're moving towards in 5 years. The first is interoperability, right? I think in 2019, 2020, when DeFi first came about, when the concept of financial Lego blocks and interoperability and the ability to do all these things in a modular function came out, that really revolutionized a lot of how people build things, right? How you would build your specific application and then how you would connect your wallet to the application, right? Nowadays, in order for an ecosystem to be robust and in order for Hedera to be strong and to be one of, let's say the handful of chains that kind of dominate the world, which I truly believe it can be, the interoperability is going to come down to modularity around features or behavior sets, right? So if in 2020 it was about the ability to have smart contracts built on top of each other, now it's about, okay, can I do privacy preservation on top of permissioning, within this particular use case? Or if I'm a particular product, can I have one product that has privacy preservation and one product that doesn't have privacy preservation? And can I do all of that easily and consistently on Hedera? The same thing goes, this sounds, as if it's a purely financial use case, but this spans across every single playbook, across every single fund, right? So the ability to take certain behaviors and kind of like behavior sets and make those modular so that a business can really build, multiple product lines around, these different feature sets, right? So that's one thing definitely that I think, I hope to see the ecosystem in 5 years, which is kind of evolving the concept of interoperability beyond just smart contracts and that technical aspect, and more about feature sets and behavior sets and kind of actions that the end user wants to take. And then second really is, whether you are using Hedera on the back end and you have no idea you're using Hedera, or you are an avid kind of, loyal to the Hedera brand, what I want to see in 5 years is the fact that Hedera is the easiest place for you to engage, right? So moving from hoop to hoop doesn't feel like you're moving from hoop to hoop. It really is just reflective of an experience you might already be used to, on your phone or on your laptop or whatever. So really kind of that ease of experience. I think it's doable, but it'll take us a few more years to get there.
It's a great answer, Elaine. Now, Shayne, how about you? Where do you think we're going to be by 2028?
Yeah, so I love Elaine's answer. I'm going to try to be more specific, and I'm going to try to call it. And if we hit these numbers, then we can, replay this on social media. First off, we're certainly going to have a full governing council by that point, and I think we'll also see some rotation off of the governing council by existing members, and we'll have backfilled them. So we'll certainly have that by over the next 5 years by 2028. I think we'll be doing over 200 billion, have done over 200 billion transactions by that point. I think network revenue will be between 40 and 50 million dollars a year. Yeah, 40 to 50 million dollars in a year, which is a significant CAGR, compounded annual growth rate of 40+%. And TPS will be knocking on 10,000 or maybe even over 10,000 TPS and knocking on the door. So I think that we're going to see a massive growth over the course of the next couple of years. And there's some things that we're working on that can completely, obliterate those numbers and put, significant, even more significant growth in the numbers I've put out. So, look, having done this a couple of years, I've never been so excited about the promise of what we're working on, what we've built, and what we continue to do, and what this community continues to do. The innovation coming out of the community, continues to be exciting. And, we just want to continue to be good stewards of HBAR. We understand the role we play in helping build the ecosystem. We're not doing it alone. We also understand that as well. And that we want to be good stewards of the HBAR that we've been entrusted with. And so that's what we've done. We've taken it really seriously. And, and I hope that this community continues to be as vibrant as it is today. And this ecosystem continues to grow at the pace that we've continued to grow over the last couple of years.
Well, it's a good vision to have. I will say that this conversation has been invaluable for me. I'm sure it's going to be the same for the audience. Thank you both, Elaine and Shayne, for coming by and giving us an update.
As always, Brandon, thank you.
Thank you.